Tesla just got hit with its largest recall in history, 2.98 million vehicles ordered off the road in China. And after the bell today, Wall Street already set its sights on NVIDIA's giant earnings print next Wednesday, August 26. China's market regulator SAMR issued the order, and it covers nearly 2.98 million Teslas already registered across the country's roads. Two overlapping defects sit on the same vehicles, and both are pure safety issues, not performance problems. First, the flush door handles that first responders cannot quickly locate after a collision, which can delay urgent rescues. Second, driver monitoring software that stops issuing eye-tracking alerts to distracted drivers in a subset of those same cars. The remedies are actually low cost for Tesla: free warning labels on door panels, plus an over-the-air software update for the monitoring bug. So the direct financial hit to Tesla should stay contained, but this recall dwarfs any prior single Tesla action globally by unit count. At 2.98 million cars, this is the single largest Tesla recall on record anywhere in the world. For Korean investors, watch battery cell and auto parts suppliers linked to the Tesla ecosystem for any sympathy move at tomorrow's open. On to next week's biggest earnings print. NVIDIA reports Q2 fiscal 2027 on August 26, right after the closing bell. The conference call kicks off at 5 p.m. Eastern, 2 p.m. Pacific, the same slot the company always uses. Management guided revenue to $91.0 billion, plus or minus 2%, when it reported last quarter. The 61 analyst consensus is running slightly hotter at $91.85 billion. So the whisper is already above the guide. For context, Q1 FY27 delivered $81.6 billion in revenue on a 75% non-GAAP gross margin, both fresh records. Three things to watch: the beat magnitude, whether gross margin holds above 75%, and the Q3 revenue guide. The Blackwell Ultra timeline inside the Q3 guidance is the number the buy side is really tuning in for. And the sell-side consensus rating heading in is strong buy, so expectations are already stacked high. That's why this print sets the tone for the entire AI supply chain in memory, networking, and Korean foundries alike. To biotech now, Gilead posted a stunning $10.5 billion net loss for Q2, or negative $8.45 per share. But almost none of that came from the operating business. It was accounting from a deal that closed inside the quarter. An $11.18 billion charge for acquired in-process R&D, plus a $1.75 billion impairment, did essentially all of the damage. Strip both out, and product sales actually grew 8.1% to $7.63 billion, against $1.96 billion of profit a year ago. And Gilead still raised full-year guidance today, telling investors the underlying franchise is intact. Turning to cable, Charter Communications closed its $34.5 billion acquisition of Cox Communications on August 20. The combined company will serve 37 million customers across 45 states, becoming a new U.S. cable giant overnight. And in a rare corporate twist, Charter plans to adopt the Cox Communications name within 1 year of the close. That rebrand lands as streaming keeps squeezing the traditional cable and broadband bundle across the whole industry. Quick hits: Lockheed Martin printed Q2 diluted EPS of $7.94, up sharply from just $1.46 a year ago. Backlog set a record $230 billion, but that year-ago comp absorbed $1.6 billion of program losses across 3 contracts. MetLife's net investment income climbed 18.4% to $6.7 billion, its highest single quarter going back to early 2024. Adjusted earnings rose 15.1% to $1.6 billion, though almost none of that lift reached the reported GAAP net income line. Arthur J. Gallagher grew total assets 15.8% to $81.8 billion, powered by the Assured Partners acquisition that closed last August. GAAP net income fell 12%, while adjusted EPS climbed 23%, the familiar split between the two earnings scoreboards. T. Rowe Price agreed to buy F/M Investments, a DC Bond-ETF manager whose ETFs are already bigger than Tro's own. Neither side disclosed a price, and notably no 8K filing followed. The current report companies file for material events. And Supermicro closed its export control probe this week without the item 4.028K some watchers had flagged. What to watch at tomorrow's open is Tesla's ADR reaction to the China recall, and any pre-NVIDIA positioning across chip names. For the full breakdown on every one of these stories, visit LineVestNews.com and subscribe to LineVest Daily for the morning brief.